how do you work on your process? Because if it's not going well, you got to really scale down and get in there and try to figure it out and be okay with. Don't have some like haughtiness that you're too good to make that kind of a trade, because like the trade is the trade, the move is the move. And it doesn't matter if they're not sophisticated participants, they can still move the market. He's like, oh, I'm really glad you did that. I'm short 100. I'm like, well, like the float, that's like most of the float. Okay, I'm glad I was right.
Hello and welcome to the Trader's Journey for Investors Underground. In this episode, it's an honor for me to get to share my recent conversation with Neil O'Donnell. Neil and I recently met up in Florida, and he was kind enough to share the details of his trading journey with me. You'll hear from Neil what it was like to trade in the year 2000 during the dot-com bubble, and then what it was like when the bubble burst, and he had to find new ways to find edge and trade professionally. He's now done that for over 25 years and has a lot of information to share. Everything from maintaining an open mind, finding new ways to find edge in the market, and so much more. I really hope you enjoy the conversation. Neil, thank you so much for being here. Welcome to the show.
Thank you for having me. I'm very excited. I've never done anything like this before, and this whole production is going to be very amusing to a lot of my friends and family because I'm not really out there in the public sphere, but I'm psyched to just talk about things and share things. And I've seen a bunch of your other episodes, and I'm really kind of impressed in how you bring trader stories out there. And it's not just like championing all the big wins. It's like the full journey, it's messy. There's people make money years, don't make money years, have long careers, and the whole thing is messy. And I think one of your episodes, recently I saw the episode with Jason Shapiro, and like this guy, if you guys haven't seen it, maybe stop here and go and watch that one first, because he's super smart and knows a ton. It really shows that like at whatever level, it's all hard. It's a struggle and it's hard. And
yeah, one of the things that I loved about that episode with Jason Shapiro was just how humble he is as a market wizard.
That's been my experience in trading. That's how it is. It's like hard, easy, hard. And then years later, a little bit easier, and you just keep at it.
Yeah, and that's why I'm so excited to talk to you, because, you know, Dr. Crawford put us in touch, and he said that you've got some amazing experiences from trading. And so I'd love to start at the beginning if we can, Neil. Okay. So, you know, when did you first hear about the stock market and trading? Because it might be different from when you first walked onto the floor.
Yeah, no, I had no experience whatsoever. Didn't take a finance class. I grew up in Buffalo, not my world at all. But I went to college in New Jersey and then graduate school over in England. And all of my friends were going to London or New York to work in the financial industry in some capacity. Late 90s, it was like, that was what was happening. So I didn't really know what I was going to do. And I had known a couple people that had been traders, and they were like, oh, I think of all the things, this is probably going to fit your personality a little bit better. And it was an interesting time because I think really for the first time ever, you could start a job and be in the action. Like you weren't like years later having a bunch of clients and then trading for them. You weren't writing research reports. You were like, they're going to hire you. You're going to start trading actual market. And that seemed like super exciting, like fun, exciting. I don't know. I didn't know what a job was going to be for anything, but I thought if I have to do something, that sounds exciting and fun.
What were you studying?
Anthropology. I did a master's in social anthropology, and I was on the rowing team over there. It was super fun, super awesome. And then I just kind of left it all behind and became a trader, and I had never had any plan to do anything like that. But it was interesting, and the whole thing was brand new. Trading was just bursting onto the scene. You could just do it on computers, and it's changed a lot since then.
What did you think trading was going to be like before your first day walking onto the floor, and then what was it like that first day walking onto the floor?
I had done a little research and I kind of thought, yeah, it kind of looks like video games. I played some video games, and when I got on the floor, it was like 24-year-old guys playing video games. That's what it looked like. And that's it was pretty unsophisticated, and that's kind of what it was, to be honest.
Yeah. What was that first day like for you?
I started on March 13th of 2000, and the Nasdaq peaked on Friday, March 10th. So I started on the Monday, and I walked in with my good friend Brendan O'Dwyer, who started on the same day with me, and I still trade with him to this day. And we walked into the door for the first time, and they said, "You're going to be junior. You're going to be our assistant traders," and that meant you were going to help out the traders. You sit next to them, and the setup is just, I'm going to talk about it, and it's wild to think about how different it is to today's market. So the traders had their level 2, they had their quotes, and they were only trading Nasdaq stocks, Apple, Intel, Cisco. And the assistant trader's job, we had an Instant machine, which is a computer next to their computer. And the Instant machine showed the book of orders from institutional orders. And on the traders' orders were the market makers, the buyers, where the market makers, how much they were willing to buy, how much they were willing to sell, but not the orders. And they would show so we had Apple, and it would be 25 by 25 and then 6, because it was in fractions, 16ths. And on the bid, there were 25 orders, and then the next level was 10, 1. And on the Instant machine, it went from 1 to 99. Meaning one lot to 999. And our job as the assistant traders was to tell them what that looked like. And what the traders were interested in was when it got to 999, because there were more orders than 999. It would go up as much as ever, but for some reason that machine didn't have an extra digits. So it just meant there were unbelievable number of orders. So it would be I would say Apple, the bid, 999 on the bid. And that meant that the trader would buy, and they were trying to make, they could get filled for 1,000 shares. The market maker had to fill them for if they were there for 1,000 shares, they had to fill them for 1,000 shares. And the market makers, as the orders would build up, they would hold the market. It didn't just move back and forth. It just sat there, and then they would move to 25 and a 16th, then 25 and an 8th. So, and then it would go 25 and a quarter, and the trader, I would say, oh, there's not 999 there anymore. That buying interest had come down, and they sell, and they made $250. It was generally 1,000 shares, and they would do this over and then it would go back down, and they would do this over and over again, and it would be 1 million shares at the end of the day, which is 500,000, 500 trades of 1,000 shares making $250. And the win rate was astronomical. It was huge because it was they had to get filled, and then the market moved. And the second part of the assistant trader's job was when those market makers didn't fill, and this is really fascinating, it was called a backing away. It meant that they didn't fill that order. And so you would call this number to the NASD and say, hey, the market maker didn't fill for 1,000 shares. Now they would call you back 5 minutes later and tell you whether they should have filled it, whether they were obligated to. And they would say, okay, do you want those 1,000 shares? But it's 5 minutes later, and it's a free call option. You can be wherever the market is, and he's yeah, we'll take it. And then you made the money, and that was it. Or you could say, no, the market moved against me, I don't want it.
That's quite an edge.
It was really crazy, and it was all new technology, and it was all happening. But these guys were smart. They were taking advantage to the hilt of the way this market worked. And they didn't know, they didn't know about fundamentals maybe, or they didn't know a lot of the things that we know 25 years later, but they were super efficient in taking advantage of all of this stuff. And then there would be IPO days, and the IPO would hit, and if they got filled, like the IPO moved like 80, it would, like everyone went for, until they stopped going up, they would start here and they would go like 80 points, 100 points, and you just make that on 1,000 shares. And like, guys would be like, that was awesome. We had a great day. So I was a trainee for 3 months, March, April, May, and then I started in June. And I kind of got my feet wet, tried to figure it out. And then in July, it was super lucrative. Like it worked out really well. In August, I made a bunch of money. In September, I made a bunch of money. It was pretty, I mean, not as much as these other guys because I just started, but like for like somebody who started a couple of months before, it doesn't happen like that anymore. And then in October, it just like of 2000, it just stopped. And like a bunch of people lost money and you couldn't really do this anymore. Then there was the election. There was Bush-Gore election in November, and they didn't have a winner. So like everything really ground to a halt. And then during that period when it was ground to a halt, they changed from fractions to decimals. And then the whole game was kind of over at that point.
And to back up for a second, when you started trading June, were you implementing basically the same strategy as the guys when you were the junior trader helping them?
Yeah, because I could see what they were doing, and like it wasn't like super complicated. You just had to like get yourself to do this kind of thing efficiently over and over and over again. And you didn't really have a ton of losers until it all stopped, and then it kind of people kept trying to trade like that, and it was for a few months, and then it just didn't work anymore. So
did you have any sense at the time that this type of trading might not always be around, or this way to make the money?
Well, I didn't know. I just knew that I definitely knew it was insane. Like when I went in for the interview, the president, Steve Hold, he like showed me a printout of, he's like, oh, there's 40 traders on the floor. Here are the checks I'm writing for last month. And like half of them started this year and 30 of them are making 6 figures for this month. And I'm like, okay, I'm coming. I don't know what this is. There's no way that this is even at that stage. I'm like, I don't know how long this is going to last. Please get me on here as quick as possible. This seems like the strangest thing that's happening.
If you're looking for ways to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders who share their trade ideas in real time each day. Members also have access to the morning broadcasts, where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members also have access to the midday study sessions, the midweek study sessions with Sam, webinars, moderator watch lists, and all the other tools and resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our special episode with Neil O'Donnell. It definitely seems like a really exciting and interesting time to begin trading.
Yeah,
obviously you've got the .coms, you've got changes in technology,
right? And the firm, it was super professional. Like they had their own programmers, so we had our own software, and it was all built to take advantage of this. And they had the instant machines, like it was built to take advantage of this special situation, and they did it really, really well too. But then, you had to adapt and adjust after that. And nobody knew when that was going to happen.
Yeah, and to complicate things a little bit, I mean, we're talking at the very end of 2000 into 2001,
right?
And then, in September, you have, you had 9/11 and you had changes going on in the market. Can you talk a little bit about some of the adaptations that were coming down the road as of 2001, the way things were about to change that you didn't even know at the time?
Well, it was really a lot of the people who didn't get to experience those ultimate gains, but started in the period that really hung on, because we were like, well, maybe it'll come back. And like, we didn't have big losses because we didn't have big gains. So we weren't really fighting anything. We were just trying to figure it out. And so it was just like, okay, now we got to learn what trading is and like how to actually trade, what the market is, what fundamentals are, what technical analysis, what any of these companies do or what they are. So that was just like more of a regular period of growth, and there weren't like we didn't have like a lot of like people around to tell us all of this information. So we kind of figured it out as we went on our own.
Yeah. Were you interested in the technical analysis and all of those more, by today's standards, more traditional things that you might be learning compared to what you were doing as a a junior trader and assistant?
Yeah. But the period here isn't one of great words. So you're struggling, you're grasping at straws and trying to figure out what is actually going to work, what is actually going to be apparent, what do I need to know. And we had always had a news desk of people who read the headlines from Bloomberg or Reuters, and kind of like what Benzinga does now or Trade the News or whatever. And we had our team that did that for us, that told us what those stories were. And gradually that kind of more became the focus. Like people could really grasp on to like, okay, this headline hits, this news story hits, this move the stocks. And I think we can talk to our programmers and developers and develop our software so we can take advantage of that part and be the fastest people. And then like everybody had their own, news terminal next to them after a little while. So like we didn't have to rely on somebody calling over the speaker. Like you could read it, interpret it, and do it all on your own. And that was like some of the guys got really, really, really good at this. And like I was okay, but I think I probably lacked whatever that super fast brain twitch that like you can read something and within a quarter of a second, and like they were like, and we had the software developed so like when the headlines hit, you just clear out all the levels, like, and you can get all the shares. And but some of the guys were just really incredible and amazing at that. And I just kind of went along with it and did okay. And then doing that, you do a lot gradually as it gets more complicated year by year, as algos come in, as more people take an interest in that style of trading. You just have to get better and better and better and know more, and what specific part of the earnings is important and how are people going to react. So it's just like a learning process.
Yeah. And where did you find edge and your type of trading style throughout that time period and into the maybe the mid 2000s? What was working for you, and what eventually became your style, and why did it become your style?
Okay, well, after the Nasdaq kind of blew up, then I moved over and started trading NYSE order flow, and it kind of worked a little bit of the same for a bunch of years. That worked out pretty well. And while I was doing that, some of these other guys got really good at the news trading, and then I eventually was like, oh gosh, I gotta jump on board and get a little bit better at this. And then that really is the edges, like, and kind of working together with like a team of people who are all doing this one thing is something that like a bunch of people working together and kind of having little bits of different information can kind of help each other along. And then you're pushing each other and trying to find out new ways to take advantage of the news stories and like what's going to be important. And so that was like an edge for quite a long time. And then different things would pop up, like Twitter came about, and we start seeing like, oh, like people are like posting, what is this Twitter? People are posting, and then the short report people like Muddy Waters, like he's on Twitter, he's not showing up on Bloomberg. And so like, if you have the ability to see this first before it hits the rest of the market, well, that's going to be pretty good. Yeah, I remember in the early days, it was like he had released this report on, I think, Orient paper, and it went down to nothing. And then like a little while later, I saw that he had a Twitter account. I like put it in, and one day I'm looking at it, and I'm like, oh, it just pops up. He's got a short report on Sino-Forest. And I'm like, oh, Muddy Waters did a short report on Sino-Forest. And I like short like 10,000 shares or whatever. And this guy behind me, Keith O'Malley, was like the greatest news trader in history. I just hear, and I'm like, okay. And he's like, what did you just say? I'm like, remember Muddy Waters? He has this short report on, and it's on Twitter. And he's like, can you see the report? I'm like, no. He said he's going to put it on his website. We go to the website, refresh. It's not on there. Finally, it pops up, and I'm like, he's like, oh, I'm really glad you did that. I'm short 100. I'm like, well, like the float, that's like most of the float. Okay, I'm glad I was right.
Wow. Yeah.
So that was kind of crazy. And then, it's just funny how it's important to see how markets change, because like then like a year later, like everybody's putting out short reports, and like sometimes they go down, sometimes they go up, and they're not really that important. And then like Bill Ackman shorts Herbalife, and then he's on CNBC, and Carl Icahn squeezes them, and then that means that everybody else who puts short reports, they get squeezed. And so like, it all changes, and you got to really, there's no, I've never had like a definitive like gospel that like, this is how it's got to be. This is what's going to move the market. I'm just like able to kind of be a little bit flexible.
And it seems like that might be one of your edges from a third-party view, is that you're willing to, whether it's adopt new technology at a time when people only saw Twitter for being what you're eating for breakfast and just didn't think much of it, or thinking about ways that maybe the market is changing, different cycles. Is that something that has continued in your trading journey, is being an early adopter to things, staying open-minded about maybe a move can happen or it might not happen, and staying malleable and flexible? Is that fair to say?
Yeah, I would say my interest is in what's causing the move. Like, I don't really care that it's like a legitimate, it changes all the time. You have to be what is causing the participants to have, what are they going to do? And you just want to think about what they're going to do. And it doesn't matter if they're not sophisticated participants, they can still move the market. So like, it's good to know what non-sophisticated participants are going to do. And you can know what's sophisticated, you can know Fibonacci's and moving averages, and like whatever that is going to happen. But also moves happen, as we've seen in different periods, from unsophisticated participants. And in certain periods, like, it's really important. It's really good to find out where they are and where they're getting their information and what's causing them to do things.
Yeah, absolutely. We saw that. I mean, they just made a movie about the rise of dumb money.
Yeah.
And is that something that you kept an open mind about, the potential of people to buy GME and bring it up? Or
Yeah, absolutely. And I think I'm a little bit fortunate that I'm a little bit open-minded about this stuff. It doesn't. I don't have the gospel about it. And so in 2020, when COVID hit, I remember my neighbor came down to Florida, and he's like, yeah, my son, his college stopped and he wants to get into trading. Can he come and talk to you? Yesterday, he made $5,000 in this stock. And I'm like, wait, what? Yeah, have him come talk to me. Let's I'll show him what I'm doing. And like, really, I show him like 2 or 3 things, and I'm like, hey, so can you tell me, why did you buy that? What's going on? Do you have other friends who are doing this? How is it happening? He's like, yeah, we're just like, there's this Discord. And I'm like, what is a Discord? Show me how to get on there. Show me who the people are. Show me what Reddit is. And like, I was immediately like, well, this kind of feels like 2000. Like there's these kids who are like 20 years old and like they're they're involved, and we haven't had for 20 years like young people who didn't quite know what they were going, but they're gonna invest and be in the market. And I'm like, well, I didn't really have to think about it because you could already, within a day, you could see the moves happening and you could wonder where they were coming from. And I was just like eager to really try to figure out like what is behind some of them. And some of that stuff was a little trickier, like the Discord and the Reddit things. Like some of it was a little scammy and a little bit tricky, but like really simple, easy things. Like all of a sudden you're on CNBC and every single thing that like certain people mention a stock and it goes. So like I got it on all day. I'm like happy to like just try to be faster than everyone and get in there and make those moves. I remember. And I was staying late and I'm like trading like fast money, mad money, like all this ridiculous thing that people are like, why are you doing that? That's so dumb. And I'm like, well, I don't know. It's here. It's happening. It's working. It's not like all of these things are turning out when I trade them, they work. And I'm sitting there and something comes across the Bloomberg. It was like Kathy Wood, ARK Fund invested today, changed their portfolio and invested today in this stock and this stock. And then those had already moved like 2 minutes before it was on Bloomberg. And I'm like, oh, well, why? She's not buying those 2 minutes before she releases them. And I'm like, I go on the website and they're like, do you want our newsletter that comes every day that tells you our updated portfolio? And I'm like, yes, I do. Yeah. And it comes to the email and I'm like, open it up. What does it say the next day? And I'm like, it said she bought such and such stock. And I'm like, all right, I'm buying. Yeah. And then 3 minutes later, it hit Bloomberg and it like ripped. And I'm like, oh my gosh, this is crazy and amazing. And then like, 4 months later, I mean, I would say that probably lasted like 2 or 3 months. And then it never happened. You couldn't, email still came, but it didn't move anything. Yeah. So you just, when things are happening, just, don't have some like haughtiness that you're too good to make that kind of a trade, because like the trade is the trade, the move is the move. Yeah. Be open to what's out there.
What do you think it is, other than possibly a bias as to why people get hung up on this? Because it's something that as you're explaining it, I'm thinking to all the people that said, I'm absolutely not going to trade any meme stocks or buy any NFTs, even as they're ripping, and obviously they a lot of them went down. But there's two sides of a trade: the going up part and the going down part.
It's probably more of a time frame thing too. Like my time frame on a lot of these things I just like wait till they go up and then I sell. Like I'm not gonna stick around for too long. So like, I mean, I didn't hold meme stocks in my actual portfolio. I'm not going to do that. But I'm happy to sense when participants are going to want to buy something and try to sense when they're going to slow down when they want. It's not that different from 2000. Like you're just sensing like when the buyers stop being there, and then but those are like, that's kind of specific periods, but it does happen, it happened in 2000. It kind of happened a little in the run up for 2008, it happened in 2020, but it also happens in other periods. For like, there was a period in the mid 2000s when like anybody said anything about a Chinese stock, and the Chinese stocks reps, and today they're like the worst performing for so many years. And marijuana stocks and, whatever it is, there's like, and there'll be like a whole section of people that are like, I'm really interested in marijuana stocks. So like when somebody important says something about it, it's going to go up. So just, pay attention to that, and maybe it'll happen. And then you get into other periods like now, and there's not too many unsophisticated. It's a more regular market, and so you gotta adjust and kind of trade in more standard ways.
What's your typical hold time for a trade?
Generally, over time, probably pretty quick minutes, but like there will be times where you'll hold it all day, or it really goes back to like the interest, the participant interest, and if I try to get in before they want to get in and out before they get so tired that everybody has to sell. And I don't have a dogma on that really either.
How would you describe your trading style?
I think if there was one theme through all of it is like paying attention to the participants and their sentiment. And like I give an example from last Friday. There was a headline: Fed Collins says Fed stands ready. Okay. Now I've been trading for a long time. I watch the Fed a lot. I know that the Fed always stands ready. But this headline hits, and the market really, it's ready. Like it needs them to say this right now, and that's why they put it out there. So like, there's going to be a pop. So okay, so buy it, because people after me are going to want to buy it. But I also know, like at some point, very soon, CNBC is going to come on, Steve Leeson is going to come on, and he's going to say, you know, this isn't really new information, and then all those people are going to want to sell. So like, you know, where's the sentiment in both of those things? I want to know, are the participants, you know, the smartest person is going to say, this isn't new information, I'm not buying it before. But like, I know that there is going to be a sentiment where people kind of want to hear them say that and get a little excited. And then I know that at some point they're going to be like, oh, we got a little too excited about that.
Do you find yourself interested in trading both sides of that, to the upside?
Oh yeah.
And to the downside shorted? Just try to take the whole thing.
I trade like technical patterns. I try to line up all different time periods. And I'm not sure that I look at it a little bit in a similar way, in that like, I'm not going to say every time it goes to this thing, then I buy it. I'm really looking for what the sentiment is and what the participants are going to do. And really, when in more technical trades, I'm looking for, because you're looking for the algos are such a big part of all of it. And where are they hunting the stops, stopping a bunch of people out, getting people off sides in the wrong way? So I'm looking at like, what are those participants going to have to do? And that leads me to where I'm entering. And so I think maybe newer traders, or I don't know, less experienced traders might be like, okay, so we got to trade this when this Fed headline says this, or we got to trade this when this technical setup gets to this point. And what I'm saying is, I am interested in those things, that Fed headline, that trade setup, but I need to overlay it on what is actually going to, what the sentiment is actually going to be, what the algos are actually doing, what's actually happening.
How much are you looking to find maybe everybody is in on this long, and are you looking to sort of, you know, mean revert or get ahead of the move, or are you trying to join the trend as it's happening? You know, in terms of an entry, how are you thinking about that?
So in terms of those kinds of trades where I'm lining up all different time period technical things, and when a whole bunch of different things kind of come together, I like it. I'm like, that's starting to look really interesting. And then to get in, I'm kind of waiting for like a shorter term, kind of something to happen where people get excited in the wrong way, or there's a volume move in the wrong way, and I can kind of make a guess that the algos took out a bunch of stops there, and then maybe those people will want to get in later or something.
Yeah.
But that's a work in progress. I don't, you know, none of it is perfect. I'm saying all these things and I'm wrong as much as I'm right. It's all hard. It's all grind. It's all tough. And, you know,
Looking back
yeah.
on those first few months, did you kind of foresee that things would eventually,
No,
or did you think it was just going to be all?
it's interesting. Like when you're starting out, you kind of in your head a little bit, you think, oh, this is like a, you know, careers. You get better and better and better and better, and like you just advance like every other job in the world. And like, but as you know, as time goes on, you just you go through it, and you're like, oh, well, this is a tough period. Is it ever going to get better? And you just keep showing up, and hopefully it gets better. And
Yeah.
fortunately, a lot of times, just when I was like, it is never getting better. This is just like not really good anymore. Just like that day, whenever I was like, I wonder how you actually make a resume. And then like the next day, I like, oh, this is okay. This is okay. And then you build a little bit.
That actually, I think, is really important insight, because there might be people that think that trading is just like one day you make it and that's it, and you cross that plateau
Yeah.
and that's it. It's just, just choose your
Uh,
Ferrari color every year from that.
I think I mean, there may be people, maybe there's people out there like that have that. I've not really met any of those. I see them on like Twitter, and it seems like, or like that have like, you know, chat rooms that they run or whatever. I really don't know. I wouldn't, you are a little bit more in the industry, and I always wonder, it must be hard for like actual regular traders who grind and who are kind of who like do kind of good job and have tough times, and then they want to share that information maybe in like a newsletter or whatever. It must be, because I'm not part of this world, difficult or infuriating to differentiate themselves from a crowd that seems like they have a lot of more regular winners, whether they may or may not. I don't know.
Yeah. Trading is just this constant evolution, grind, and trying to be able to just figure out what the market is doing and adjust.
Yeah.
And
This is what I kind of want to go back, because we did talk for a little while about 2000 and 2020, and like it is 2025 now, and I started in 2000, and those were like 2 years. Okay. That is not, it's not like that. I don't like get newsletters and all of a sudden make a bunch of money in like 4 minutes. Like that doesn't happen in all the other years. It's hard. It's just the grind is just the process, the journaling, the figure, like sitting down at the end of every day and like, what worked, what didn't work, why did it work? And can you come to some sort of understanding of what mistakes you made or what the market looks like? And it's hard.
yeah, how much time do you spend now
Yeah.
doing things like trade reviews and, cataloging your types of trades versus when you first started? What does
Oh,
that
yeah.
look like over the duration of 25 years for you? Is it similar? Is
Yeah,
it a lot different?
it is kind of similar. I kind of straight away, when I went in there to work, and he was like, there's all these guys, I was like, okay, I'm gonna do everything to be one of those guys. I'm gonna try to do this as like professionally as I can, and when I go in, I'm gonna try to learn and get better every day. And so like kind of fairly early on, I was trying to kind of keep track of how it all worked, and I really had no idea. So now it's a little better in terms of like making accurate assessments of like what works and what doesn't. But like it's been a pretty steady trying to assess every day of like what is going on and what's not.
What have been some of the most similar themes and patterns
Yeah.
in your 25 years so far of trading? And what are some things that are just absolutely different today than they were when you first started?
We'll start with the different one is just like the you have algos, you have AI, you have like not humans who you're competing against. Like if you were like they have these new, I saw these AI robots. Like if you were a boxer and had to box, like you're competing. It's not fair. It's not a fair fight. So you are just. It's hard. You're trying to compete against them, and that's the biggest difference. It just has gotten more. It was so inefficient back then, and it is so. I don't know if it's efficient now, but like 2020 wasn't super efficient. There was lots of inefficiencies, but it's the whole market is just the structure is more efficient. Besides, even if you had the same level of participants, what is similar is I don't know that I've been working with the same guys. Like they're fun. I talk to them. They're good people. One thing that I would encourage traders, if you work with other people, like just really help each other out, like work together and share all of your stuff, because then they'll share the stuff back. And when my buddies have good days, I feel better than when I have good days like that. Like I get so excited for them. And I know that it goes both ways. They're just like, we just want each other to, do okay.
Yeah. And if you were to trade a trader from scratch in 2025, what would that look like? What would you tell them to do to get started, to learn about the market? What would you tell them in terms of a strategy that they might want to start with? What might that look like? Or what advice would you give them? Would you say, take it from me, after 25 years of doing this, 1, 2, 3, what would that look like?
The people who have been successful over all these years, they really would have been successful doing anything. So like you get a lot of market participants who are like, I'm going to trade. Like I kind of want to be like, to tell people like, if you kind of failed out of your last job and like school didn't go that great for you and like, it's I don't know, it's like it is, you need so much internal resilience, you need like this mental flexibility, and it kind of takes it takes just like as a baseline, there's more people who want to get involved than probably should, because it's harder. I don't know that I could start and like we got lucky that like I managed to survive a couple of periods and then like not live some crazy lifestyle. So like I could survive to the next period. So like if you start now and you have a hard period it might be 5 years, it might be hard to make money. I don't know. Can you do that? Are you willing to do that instead of taking some other job? I don't know. I'm not really sure. It takes I would say someone who's really smart and super mentally flexible and resilient and okay with it not working out for a long period of time. But usually like smart, aggressive, resilient people kind of want to see a reward.
Yeah.
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 And you don't always see a reward as,
in trading.
Right. For a while. And then all of a sudden it happens.
Yeah. Yeah. And in your own words, what would you say is your greatest strength as a trader to be able to survive all of these years?
One thing that really helped in my first year, I was reading like a trader's book, and people might know exactly what this is, but I can't remember which book it was. But there was an anecdote. It was only like a paragraph, and it was like, I'm on the trading floor. This guy, he's 55, and he's having a tough time because he's got this big house and 3 cars and kids in private school, and he's just going down going down the circle because every trade is not working out, and it's worse and worse because he has all these financial pressures. And from that always really, really stuck with me because I'm like, well, this guy, he made it, man. he traded all these years. He had the dream. And how did he end up at this point? And so I always like, whenever things were good, I was like, I gotta live, just invest, just put it away, just live very modestly, because like, I don't know when the next period, and I saw that with the guys who started, like, I don't know when the next period's gonna come that's gonna be good. So, you gotta like, there's not many other professions where your lifestyle really affects your trading, because if you have financial pressures or like bills to pay from your trading, man, it gets really hard. Like, how do you have your process? How do you work on your process? Because if it's not going well, you got to really scale down and get in there and try to figure it out and be okay with a long period of figuring it out. So I would say, like, for people, like, if you did good in 2020, just stop, just chill, just chill. Like, it's going to be really tough if you, it's just on a different level of like professional athletes, and like, you get drafted and you get your contract for $3 million, and that might be the only money you ever get. Okay, so if you get that and you put that in the bank, you can have an awesome life. You can get like $1.5 million in the bank and invest it and become a high school football coach and never play football again. And like, when you are 33, it's 3 million. When you're 43, it's 6 million. And like, all of a sudden you're like a football coach. And so why, if you're a trader, if you have big years, just chill a little bit, because you want to get to the next period where like, it's a little bit easier, where either you figure it out or the market gets a little bit easier. And if you can get multiple periods of 2000, 2020, 2008, like, most traders get like one or two. If you get 2, 3, like, that's going to really, then you're going to be okay by the time then you get some options.
Yeah. I think that's incredible advice, because you're looking long-term and you're thinking outside of just trading.
Yeah.
Right?
And it was, a lot of it was like a fear. Like, I got in there and I loved the action. I loved hanging out with the guys. And I was like, I cannot go and I'm not going to fit in well in an office somewhere else where like, they're like, it's 9:30 and you're not here, or write emails. And it's not, that's going to be harder for me than just not spending my big year. Like, that's easy to do. I can do that. But if this doesn't work out and I go and do something else, I might be more unhappy.
Yeah. And one of the really interesting things there is that you're in some ways telling people to not take a vacation, but remove yourself from risk exposure in some ways. I mean, it's almost contrary to the appetite that people might have for trading, and yet it's one way to keep people prolonged in their career.
It was throughout, like, much more conservative, like, and pretty flexible. When things weren't going well, I was okay to just, ride it out and try to figure it out and not push the envelope. I wouldn't. It's a tough situation to have good years and then follow them up and give that back. That fortunately didn't. I would kind of start to see the not good year coming and be able to like cut it down.
From your trading journey, what advice would you give yourself back in the early days? Is there maybe a blind spot you had, or something based on what you know now that you would tell yourself in the early days that maybe you weren't thinking about back then?
I might have more aggressively tried to get information faster on the markets and how to trade, and try to seek that out from other sources. Like, like I said, I really knew very little, and we didn't have a ton of people at the firm with a ton of experience. So it was a learn as you go. And it would have benefited to speed that up, like take some less trading and more like informational gathering on things that would help me later on.
If someone is going through maybe a drawdown or they're really frustrated that they're not where they want to be, what advice would you give to that person? And then for those who are doing exceptionally well in the past, maybe 12 or 16 months, what advice would you give to them for things to consider while things are going good?
For the person who's it's not going that well, you know, this for me it's always the size that you trade, because you can trade one share. It doesn't matter. Like, it's whether the process is if your strategies are working, because as soon as they start working, if you are paying attention and understand that, you just scale way up. Like, you can do that. I don't believe like that. I believe you can work on your process with very, very small. If you are really just hemorrhaging money, you're you shouldn't have that much size. You're not doing it right. And it's not like there's something wrong with you. It's just what it is. So just work on your strategies, work on your process. You're not seeing it, and scale way down so you're only losing tiny, tiny amounts, because it's nothing once you'll know when you've got it, when your win percentages, and you can just go and you'll just be off to the races. And for the people who are doing really well, I think you got to keep pushing. Don't be like, I did well, I'm going to try to match that. You got to look at like, what other avenues am I missing? How can I be more efficient with my time so that I can take more advantage? If it's like going that well, how can I either squeeze more size? Maybe you can't put more size into it, but you can do other trades. You're like, you've got it. You're doing it right. Like, I always found that when it was going well, like everything was going well, you could kind of do this stock, you had it and it was right. So you're excellent and you're making it work. Be more excellent, like be more, you see like there's Netflix series where like Patrick Mahomes, he is at the top of the pyramid and he sees everything on the field, and he's like, okay, now what happens if I like tie my arm behind my back or something, like some just example like that. Like, he's trying to find the next little thing that he can push it to the next level. Well, there's always something, just like, don't be satisfied with where you are. Okay, you can go more.
Well, Neil, thank you so much for sharing your trading journey.
Thank you so much. This was super fun. I'm just like, I'm not like some superstar, just like a regular, like, it's just that it's gone for a long time. And I think like people out there, like, there's more people who are just like, make it a career and regular, and like, not all the things you see out there believe. Like, you can do it like that.
I love it. Thank you.
Okay. Thank you, sir. Appreciate it.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they're available. Thanks for tuning in.